Are you a home buyer looking to take advantage of temporary rate buy down, or are you not familiar with temporary rate buy downs? I have a little chart here to show you. You can see I have an 800,000 purchase price with a 680 loan amount. That's 20% down at interest rate of a 30-year fix of 6.375. The monthly payment, not including taxes and insurance, would be 42.42 a month. Now, assuming that you wanted to get a 1-1 buy down, that means you're buying down the interest rate 1% for the first 2 years, 1% the first year and 1% the second year. So if you lock in at 6.375, that means for your first 2 years of home ownership, your rate would then be 5.375, a whole percentage point lower. That would result in a monthly savings to you, the homeowner, of $434. That is pretty significant. That's like a car payment. So, how this $434 is calculated is the difference in interest between 6.375 and 5.375 is $434.52 per month. So, times that by 12 is $5,214 for the first year and another $5,214 for the second year. So, in order to get this done, when you're writing your offer with your realtor, you would need to ask the seller for a credit toward rate buy down of $10,428, which would include the buy down for the first 2 years. So every month when you make your mortgage payment, you, the homeowner, would be paying the 3807. The 10,428 would go into an impound account with your name on it, and then the bank would pull the 434.52 out of that impound account. So essentially, the bank would still be earning the 6.375, but 434 of that would be coming from the seller for the first 2 years. Now, the advantage of doing the temporary rate buy down is that you get a lower monthly payment for those first 2 years, which helps you ease into home ownership. You can recoup your moving costs. It can help you pay for, like, let's say when you move in, you need to replace all the flooring or any repairs you need to do to the property or any furniture you need to buy. So it kind of really helps because it makes a big difference to the monthly payment. And during that 2 year window, if interest rates were to drop and you were, let's say, able to get a rate of 5.5% for a 30-year fixed, you could refinance your loan into a 5.5% 30-year rate, and any money left over in that impound account for the temporary buy down that the seller credited at close would go to pay off your loan balance, pay down your loan balance. So you actually don't lose that money. So it basically is a softer. Really helps because it makes a big difference to your monthly payment and gives you that window of time during that first 2 years to where if rates were to drop, you could take advantage of dropping your rate anyways, and you don't have to ever pay that 6.375 rate. So it makes a lot of sense. And also 10,500 is not a lot of money to ask for a seller to pay to help you get this huge benefit. If you have any questions, please reach out. Thanks so much.